Welcome everyone. Brian Hoops with Midwest Market Solutions, our May WASDE webinar. It's May the 10th, just after the markets have closed on Thursday, and WASDE report was out earlier this morning, so the market has had a chance to look at the numbers, to kind of digest them and trade them, and we're going to talk about the numbers from this report. We're going to talk about market action, technicals, and maybe what we should be looking at doing as producers out there going forward till the next, the next month or the next report information is released. Joining me here today from our Watseka, Illinois office, Merrill Crowley. And Merrill, it's great to have you on board. First time that you.
How you doing?
I'm good. I'm good. I'm glad to have you on here. First time we've had you on doing a WASDE report like this with us, but tell some of our listeners that maybe are not familiar with you a little bit about your operation in Illinois.
I basically started my business up back in 1997 to help farmers market their grain, mainly a cash marketing deal. We put together the brokerage part of the business in order to take care of situations with puts or options that might arise that are unforeseen, or just to provide a nice floor and limit our risk potential.
So you're in Illinois. What part of Illinois? Is it south of Chicago?
Well, if I went to it is south of Chicago. If you find Peoria on the map and follow it right on across towards Indiana, another 14 miles or so, and I'd be in Indiana. So right on the border there. So
it's good to have you on. I'm right now in our Storm Lake, Iowa office. Great growing conditions here. You go right in this area. A lot of farmers are done planting corn. Good start on soybeans. There's a lot of moisture. Temperatures have been pretty warm. A little farther north of our Iowa office here, it's much slower going. You get to the east, it's a little bit slower. What's conditions like, fieldwork conditions in Illinois?
Pretty much in my area is done, period. Corn and soybeans are both pretty much done. There's some people finishing up soybeans. We would have liked to have a little more rain in our area. It's not hurting us because we got good subsoil. Last night we saw about 2 to 3 tenths. There's some areas north that got a little more, but we could use a good inch right now, but stuff is popping up through the ground, looking pretty good. Temperatures are warm, nights are cool, so it's just about the best situation you can ask for in our area.
Yeah, I think if you've got your crop in the ground, everybody that has been able to get in the fields and get their field work done, their story is now conditions are almost, the best that they've been in for some time. So I think for the most part, we're off to an average to well above average start to this growing season. And we'll talk about some of the effects of that growing season and impact on what the report has to say, because there were a few surprises. It seems like every month we look at a WASDE report, there are a couple surprises that the government wants to throw at us. On your screen, there are some services available through our office. And of course, we have several different offices. Merrill's in the Watseka, Illinois, so you can reach out to him. Phone number is at our website, which is likely where you're watching this video, MidwestMarketSolutions.com. And you can reach out to any of our offices there. I know they'd be glad to assist you. And those are some of the services we provide. Merrill, I know you do brokerage work for your clients. You also send out a daily newsletter after markets close every day?
That's correct. Most days. Sometimes you get into a time period where there's just nothing going on. So, I can skip a couple of days there. But when anything's going on of importance, I always put out an email.
And that is for your clients, subscription-based as well. So if a client, if there's someone listening that wants to subscribe to your newsletter, they can reach out to you for that as well, I assume?
Yeah, that's correct.
Absolutely. All right. Merrill, we're going to look at some of the numbers here from the report today. As I said, it was out already, and the markets have had a chance to look at this and digest it. The chart we're looking at here now is ending stocks for the United States for corn and for soybeans. And numbers here we want to look at, this is the USDA, this is the actual numbers coming out from the government, and we compare it to, to this time last year. So our old crop stocks for corn anyway, at 2.18 billion bushels, and just down just a little bit from the previous month. our soybean stocks were much larger than a year ago, and wheat stocks were a little bit smaller. But a lot of the focus of the attention, I thought, today, Merrill, was on the 2018-19 U.S. grain ending stocks. This was the first time the USDA has been giving us numbers for this marketing year here. This is the new crop marketing year, and the corn number came in a little bit larger than expected, but I thought this was a surprise to the trade, and the wheat number a little bit larger than expected. What did you take away from these ending stocks, Merrill?
I don't see anything out of line here all the way through except for the soybeans. It is kind of interesting. We did see our stocks-to-use ratio on corn go from 14.8 to 11.6% with the current 1.682 number. A lot of things need to fall in place for that to occur, but you really don't get into what's quote-unquote tight stocks until you get 10% or below on the stocks-to-use. So while it is tighter and there'll be some mild rationing going on, and the weather will be more important, that number is still gives us plenty of corn to get through the year on. Now the soybean one, I don't know about you, but we're sitting there talking about tariffs and China not taking beans from the U.S., and we come out with a report that takes off 225 million bushels and adds for extra exports from this year to next year. So we increased our export intentions 225 million facing tariffs from China. I don't understand that. It seems to me to be overly optimistic. Now, if that is true, then in the beans, you go from a 12.6% stocks to use this year to a 9.3% stocks to use next year. And that's what's considered tight. And we're going to have to start seeing some rationing if that indeed is true. I heard a rumor today where some people in Chicago were saying that when Tsai comes over here and meets with President Trump, he'll say he'll take our commodities and everything will be fine. I don't know. I have a hard time believing that. I don't know about, what do you think?
Well, anything that comes out of China, you have to take with a grain of salt. They imposed the tariffs and then stepped in, aggressively bought soybeans. I think we'll look at each commodity individually here, but yeah, this to me it just from today's action, this number was a surprise certainly, and as you mentioned, they increased export forecast by over 200 million bushels, and I think they're going to have a hard time justifying that or making that actual stand up. So we'll look at things a little bit more in depth here closer, but there were some numbers coming out of world stocks numbers as well, and let's look at those here now. This is old crop world ending stocks. New crop ending stocks are in the bottom half, and again, that's I think what you want to focus on is this number, this world crop stocks. These numbers are the actual ones from the USDA, but you compare them to last year and you can see the corn number is down significantly, the soybean number is down slightly, and the wheat number is down. So from a supply standpoint on a worldwide basis, we are moving in the right direction. We're seeing ending stocks drop. The corn one I think is catching a lot of people's attention, well below the average trade guess by just a little over 20 million metric tons. And from compared to a year ago, we're seeing a huge drop in world stocks, Merrill.
Yes, and you go from, like in the corn, you had 21.5 stocks to use in 2016-17. Last year, you're looking at an 18.22 stocks to use. This year, down to 14.5 stocks to use on the world scene, and that that's what like you said, we want to see that. We want to see that pile getting smaller. The soybeans basically are reflecting that big increase in exports, and again, to me that's a little questionable.
All right, very good. Let's take a look at our next slide here as we go into corn, and we'll look at some of the numbers that came out from today. And again, this is the old crop. On the right, we have new crop stocks, and this we don't really have anything to compare the new crop to other than last year because this is the first estimate the USDA has given us. So let's start with supply here. First of all, Merrill, we're looking at planted acres, 88 million. That's what came from the March report. and yield of 174. So that gives us a crop size of about 14 billion bushels. But if you notice down here, USDA says we're going to use more crop than what we're going to produce. We have a little bit of cushion because we have some carry in the beginning stocks. But as far as what we're using versus what we're producing, we're going to see a drawdown in stocks. Do you agree, first of all, with what the USDA has to say here?
Well, I think some of the changes you might see in that is I think you're going to see your planted acres go up, at least in the areas that have done such a good job of getting their acreage planted. You can talk to some different dealers that are saying that maybe the anhydrous sales weren't as great as they were, but anytime you get corn in an early and such a nice fashion with the ground and conditions being great, you usually see an increase. I don't know how that's going to be affected there in the northern and western parts of Iowa and Nebraska with the situation they're being challenged with the wetter weather, but I think you're going to see some corn increase here by the time we get to June. I don't see anything wrong with the bushels per acre. It should be in line with that 200 million we saw that the USDA came up with on the extra stocks on our March 30th report. There's several people that believe that was more that they were actually short on their crop production last year, so that 176.6 could actually be more close to 179. So I think 174 is a good conservative number at this point.
Yeah, I think at this point in the year, that's a very good number to use. I know R.J. O'Brien was using 174.5 in their analysis, so kind of right about the trend line there. Of course, if we have what it's going to get down to this summer is probably two different things. As you mentioned, this acreage number, are we going to decrease acres from this number? I know there's some people in the Dakotas, Minnesota, that after May 15th, if they can't get corn seeded, they may start switching from corn to a spring wheat or to soybeans rather than try and plant corn. And, the 15th of May is just around the corner, 4 or 5 days away. But there's a lot of producers in the fields right now making some progress. So, yeah, we certainly could see more corn acres. Corn has rallied in an attempt to kind of buy some of those acres, I felt. And, right now, this ending stocks number that we are looking at, 1.682, much less than a year ago. And you can see the USDA's got a wide range of average farm prices in here, a dollar range. But the upside is much higher than what we saw last year's price levels, with the downside virtually no worse or about the same as a year ago. So, yeah, my takeaway from this is based off of what we're seeing here today. This is the wild card: how many acres we're going to plant, and of course what we can grow during the growing season. So our production numbers could vary quite a bit from what we are experiencing here in May by the time we get into June and then into our final numbers later in the fall.
And I think everybody understands that, after we get this report out of the way, weather's really going to take on a really, it's going to become a big focus of traders.
Absolutely. All right, let's move to our next slide. And this is last month's numbers. This month has not been updated yet, but a couple things I think we can point out is back here, this was an estimate from R.J. O'Brien back in April. They were using ending stocks of over 2.15, I think is what it was. And the number that came in today in that 1.65 range, certainly a big difference from from what they were previously using. And this is kind of, I think, one thing that caught the trade off guard. And in this green bar, the stocks to usage ratio, what did you say this dropped to, Merrill? What was the percentage? 11?
Oh, the stocks to use dropped down to 11.6%.
Yep, 11.6. So we're probably accurately more down in this area for stocks to use, and our ending stocks projections is not that different than what we've seen in several previous years. Certainly not the burdensome that we've seen the last 2-3 years, but more in line with what we've seen here. But a far cry from what we saw, in this time frame. We're not there yet, but we are moving in the right direction where our stocks are slowly receding.
And again, you talk about yield. You can add 209 million real quick, which just had the same yield we had last year.
Yeah, absolutely. Yep, good point that you make there, Merrill. How did, if you look at the balance sheet from the USDA that came out, how did they go from projecting 2.125 billion bushels that they had to 1.6? What changes in this balance sheet did they make?
Well, basically, most of it's in production. As the production dropped 564 million bushels, they also decreased total use 175 million, so that the total change was 500. And you would expect that if you change, you start reducing the crop size, the prices are going to increase, and you have very mild rationing.
Right. Yeah. We're probably at that point where we won't talk a lot about rationing or demand rationing yet, but that could be something that we talk about. So yeah, carry out at that 2.1 usage is going to be the big thing I think that you mentioned was production. 14.2. They dropped their yields down to enough that we're looking at a 14 billion bushel crop, and of course, one of the big numbers that changed was this carry-in number here. They had 2.47 billion, and now it's just over 2.1. So some big changes as far as old crop ending stocks. What does that tell you about going forward for old crop pricing? If there's some customers out there that are holding product in their bins looking for a summer rally, does that change your advice if someone calls you on the phone and asks what they should use for some targets?
Well, it makes you think that you might be able to hold longer. The thing is we're getting real close to July 4th, and there's an old farmers don't carry corn past July 4th. It's usually not a good idea. Every year is different. If price-wise, if you look at history, if you have a May high, and it's kind of interesting, there's only been 2 May highs in 48 years for corn and for beans. And in both of those occasions, when you have that May high, the market drops right on down to August with seemingly no rally for weather whatsoever. And I find that kind of interesting. Most of your highs are going to come June, July. So, if you haven't sold yet and you're not risking too much, and depending on what your situation is with the banker, I think you could risk holding it, but it's probably wise to have some puts in place.
Okay. Yep. Probably some good advice. Let's see if we can look at a corn chart here. This should be an old crop corn chart with some seasonal tendencies on it. The 15-year seasonal pattern is for prices to make a high March, April timeframe. But if you look at the last 5 years, we have a tendency to rally out into June before we make that high.
Right. And that chart is actually showing you a coiling pattern or a pennant, however you want to look at it. And that particular chart suggests that you could see 420 to 430 on July corn. But what I've been noticing a lot when we break out of any resistance area is it seems like the funds let it go for a while and then they sell off and bring it back into it. So, I've got some cycle lows due for the 1st of June. Sometimes, in rare occasions, those invert and become cycle highs. But if we're going to move into a cycle low, it looks to me like this market should break any time. And if you notice today's, is that weekly? Yeah, it's daily. Today's close was down toward the middle or lower part of the range in the total daily range, and that suggests a possible move lower if we get follow through down tomorrow.
And I know you're a better technician than I. I wanted to ask you about this blue bar is today's bar, and it represents an outside range, meaning we took out the previous day's high, previous day's lows. does that mean, what does that, I guess, what does that mean for technical analysis of this corn chart?
Well, it means we went and tried to run the highs and ended up closing below the lows, which I know that seems obvious, but that particular pattern is, and it looks like it would qualify. There's a pattern called a hammer or a grave, I believe gravestone. It's actually a Japanese pattern. And I'm not a Japanese candlestick man for the most part, but there are 3 or 4 things I really like to look for, and one of them is a day like that. And that gravestone thing suggests if you get follow through to the downside tomorrow, that you're going to run down for a little while.
How far can we pull down? I have a long-term uptrend line drawn here. Can we come back down to touch this trend line?
That would be the first place I would look for it. Let's see. I'm trying to get an extension on here, and here. Looks like maybe down to 4. Let's see. I've got these up here at 416. And for the July, looks like 389.
Okay, so that would
$4.
389.
Not that yet.
That's going to come down here into this trend line somewhere, pretty close to 389 to 390.
398 to 3. Yeah, it's going to run right close to that. And if it expands, like if we've got a lot of longs in the funds, if they get on the selling board, you could take it clear down to 382.5.
And that would be down a little bit below this support area here.
Right.
Okay. All right. Good analysis. Let's go back to our slides, and we will move on to soybeans. Talk some soybeans. They had some excitement in the news here today. Again, we've kind of touched on some of this already, but this is the numbers came out today for this new crop marketing year. Stocks at 415 million bushels. Last year, we were at 550 to 530, and it wasn't too long ago, a month or two ago, some analysts were projecting we could have 700 to 900 million bushels of ending stocks for soybeans. What has changed, Merrill?
It's the exports. I mean, that's just about the whole story there. Because you add 225 back to 415, and you're up in that 600 area. Yeah, the exports increasing 225 million. There's a lot of other smaller numbers there, but that screams at you. And how they can figure that we're going to export more. Maybe other countries will have to come in since China takes South American beans. But I think you put out a story today that they're trying to decrease their imports in total.
Yeah, they are. That was a Reuters news story that has come out, and there was a story from Bloomberg earlier this week as well that China has moved away from any U.S. purchases, and we've noticed that in our export business. They've bought from Brazil primarily, and they've also switched to buying out of Canada as Canada has planted more soybeans, and they find another source to buy from rather than the United States. So I think this is something certainly suspect as far as what you're alluding to. Why and how do these exports improve by that much over this next marketing year? And so when I look at this, I think I have to ask myself, as we go through May and into June, we have a supply and demand report another 30 days, but then we'll also have acreage report at the end of the month of June with quarterly stocks thrown in. What can change between now and the end of June or 4th of July that would change this balance sheet appreciably?
Well, just like you said, you're showing some dates, the 15th, that they've got to get things planted up around Minnesota, and you got your Dakotas, and whether or not they're going to go spring wheat. If they don't decide to stick with from corn to spring wheat, they're going to have to go soybeans. Now, we had a deficit last year of, I can't remember, something like 1 million, 1.5 million of planted acres when they came out with the March planting intentions. And this year we're looking at something very similar, like a 1.3. By the end of the year, something had been planted, and those acres that had disappeared in March reappeared in June, at the end of June. So what they're going to get planted to, I'm not sure, but Unless soybeans totally break down here, I think you'd see more soybean acres come into play.
I think certainly that is a possibility that we end up seeing much more soybean acres than what the USDA said. Remember last year we planted 90.1 million. The USDA says we're going to plant 1.1 million less this year than what we did last year. And that kind of flies in the face of logic to an extent. A lot of people don't believe that that would be the case. And we have soybeans, in that well above $10 for most of the spring. So they have had an opportunity. If producers wanted to seed more soybeans, they certainly could, based off of price here. But that changes things considerably when you're talking about a production of almost 4.4 billion last year and 4.2 this year. And now you're looking at similar to corn where you're producing 4.28 billion bushels and you're actually using more than what you produce. So if these acreage numbers don't change and if these yield numbers are accurate for both corn and soybeans, we're going to produce less than what we're using. So things can change, and I'm glad you pointed out that by our acreage report in June, we're very likely to see some shift in the soybean acres, and this demand number is certainly suspect when you talk about the export forecast compared to 1 year ago. That's a very big jump.
Well, I've been hearing that some of these guys don't want to rotate back into beans; they want to go into wheat, and so they may wait longer. What are your guys hearing up north about that?
I haven't heard that they're going to do that much as far as not planting any wheat acres and going into soybeans. I have not heard that. I think there's, in the winter wheat plains, they're still waiting to see how good this wheat crop is going to be before they abandon those acres. And certainly if we see a lot of abandonment over the next several weeks, we could see those acres going into soybeans rather than corn.
Now you're talking about the winter wheat. What about the spring wheat?
Spring wheat, they're seeding spring wheat right now. So I have not heard anybody really talking about shifting away from the spring wheat plans. There's a lot of clients in Montana, Idaho area are planting a lot of spring wheat compared to a year ago.
I was watching AgriBowl this morning on the internet, and that guy was talking about the summer patterns. Everybody seems to be talking warm, so I don't think there's any problem right now with discussing whether or not we're going to be warm this summer. The question is, are we going to be warm and dry or warm and wet? And from what he was showing, at least through the month of May, is the pattern is set up to have rains come through more in the northern part of the country. And those are the parts that are being delayed. So, we have to keep a watch on that weather, see if that's going to keep them delayed. Usually too much rain does not affect you. As far as less acres or something, they'll plant something and they'll get it in the ground. So my point here being that, these yields, we started the year looking at yields being lower with lower acres. And I think we certainly can see these yields go up.
Good point. Yep. Certainly could see the yields and the acres both go up from here. We're going to look at one more chart of soybeans. And remember this 415 million bushels of stocks that the USDA has told us about today. This is again, this hasn't been updated yet, but just last month, RJO was projecting ending stocks at 650, and now the USDA said actually they're saying we're down into this range, this this 415 million bushels. So this is a big drop, and we've kind of discussed some reasons why. But is there a possibility, Merrill, that we could see bean stocks increase from here, from this 415? Is this possibly the low number?
My guess is it almost has to be the low of the year. Now, if those contacts in Chicago were right about China coming in and saying they're just going to go ahead and buy our beans, then I would agree with the USDA pushing that 225. Otherwise, all I see is that 225 being worked back into this ending stocks, which would then be over 600 million, and I could see great yields unless we have some sort of weather problem. And I guess the key to that will be to see how it trades tomorrow, if it's going to follow through, because I think people will start showing their hand whether they believe that increase in exports or not.
I always like to look at, approximately draw a line here around 350 million bushels. And you look at all the years that we've been below 350 million bushels of ending stocks, almost since 88, 89, every year except year of 06, 07, 05, 06. And last year, and even this year, it looks like we're going to be above it. So it's hard to say we're going to be real bullish when 4 years out of the last 30, we've had ending stocks this large. Even if we drop it down to 415 million, we're still the fourth largest in the last 30.
And I think this chart illustrates well demand. You look at demand there. We know very good well what the prices did between 07, 08. Because the demand picked up, and even though we had large stocks, the price went up. And the problem is we're starting out at 415, and we might go higher. And you go back, I would say from starting at 2000 all the way through probably 2015, 16, we'd start out the year with a large ending stocks number, and it would be whittled down. And that was the tendency for beans. And I can't tell you how many years in a row. Maybe you can think of it offhand. Well, here lately, we're starting with low numbers and increasing them. And that's a concern to me, especially when it comes to pricing.
Very good. All right, let's move on to the next slide. We're going to talk a little bit about the wheat markets in here. Soybeans did have a little higher close today. So we won't look at a chart. It doesn't really show you as much as what the corn does. But wheat did not have a great day as far as information coming out here. We talked about the ending stocks already. This is winter wheat production, something we haven't talked about yet. This was our first look at U.S. winter wheat production. All winter wheat slightly above the average trade, yes, but down from last year. The hard red winter wheat, which is traded in the plains, Kansas City wheat, 647 million bushels, a little bit less than trade expectations, well down from last year's numbers, and a little bit of an increase here in the soft wheat Chicago market versus year ago levels. So, we're looking at all winter wheat, 192 million bushels, with all wheat at 1.8. That's actually up from a year ago when you factor in, the soft wheat, the white wheat, and all the wheat combined. So, any takeaways from the wheat market or from this report in the wheat, Merrill?
I don't. It's just the wheat market. The only thing I can say about the wheat market is currently it shows our just absolute lack of demand for U.S. wheat.
Yeah, and that's really the key here. There's not enough supply issues to drive wheat prices higher, so we're left to look at demand. And now this is from the USDA today. Let's take a look at some of that demand here. All right, so we've got planted acres a little bit larger than last year, yield yield just very similar to a year ago levels when you factor in all the wheat. We do have some supply issues in the Kansas City hard red wheat areas, but let's look at demand. Total demand last year at just over 2 billion bushels. This year it improves, but not by very much. We're still going to have a big usage there. Total usage in our production numbers, again, like corn and soybeans, production is going to be less than what we use, but we've got so much carryover on hand of over 1 billion bushels that we still have ending stocks just under 1 billion at 955. So USDA's average farm price between 450 and 550 doesn't hold out a lot of hope for the bulls. The market or participants responded, as I mentioned, in Montana and Idaho areas, planting more spring wheat because prices were stronger. But that's really the last thing that this wheat market needs is more supply, more production, as we're already faced with too much supply and not enough export business.
The only thing I can really see positive here is if you're looking at stocks to use, we're going from 53.3% stocks to use and dropping down to 46%. That's still a huge number, but at least the pile's starting to drop a little bit.
Yeah, exactly. We're getting, we're kind of moving in the right direction, but I think this year illustrates as much as anything that, you have to have supply issues, if you're going to market grains successfully, you've got to use these supply rallies that we have, especially in the wheat market. Don't be afraid to make sales, old crop, new crop, while the market's been moving higher. So a couple other things.
That's a good point. You need to be aggressive on your wheat sales.
Absolutely. When we take a look at a wheat chart here, this is July, Kansas City, continuation chart. We've got an uptrend going in here, but we're coming down to it after making a potential double top up in this 567 area. There's been some rallies here with this chart right here. This rally was late February, early March. We had another rally in April and yet another rally here in May. So there's been some rallies, and I think you do have to limit your exposure or make sales as we move up into these rallies. As top end of the farm price for wheat from the USDA is 550. Low end is down here into the 450 range, back down here where these lows were made. Merrill, I want to ask you a couple more questions before we let you go. This is a chart of the mini S&P, and the highs that we put in back here in January. We've had some rallies. We're having another one right now. What does the effect of higher stock prices do to the grains? How does that affect corn and soybeans, and specifically, how do the funds relate to these?
Well, in general, what you see is the stock market will take money away from the commodities. So when you have a strong commodity market or financial market, a strong financial market, you'll usually see the commodity market suffer. And that is something that's been going on in corn and beans. The funds are very long. I'm not sure. I thought somebody said it was a record long in the commitment of traders last week. And we just continue to see the open interest rise. The increasing open interest suggesting as more money is coming into the market. With this particular chart here, even if this is a correction, you would think the first leg would be supportive of the second leg higher, and that would suggest a run up, possibly up to the 249.70. That's the wrong chart for this. Oh, you got the 500, and I got the. I have got the Yummy Up. I'm sorry, that's why it's different. But it would suggest this runs just a little bit higher, possibly up to the 2750 area from what I'm looking at here. Overall, you've got to look at the economies. There's concerns about the debt. There's concerns about how this tariff thing is going to work its way out. It was a big killer for markets back in the 30s when they started having tariff wars. And if this were to continue, I think that stock market's going to go lower, and we'll see more support for our commodities. Because once that starts to take place, people want to have something of value in their hands. They don't want to have the paper of the stock markets.
I understand.
And the other thing that can push this down is our interest rates. As we keep increasing interest, I just saw that we made a new high, all-time high in the trillions for student debt. And if that interest rate goes up, that just makes costs of it and takes money out of everybody's pocket, which means less to put into the stock market. And I think your big money is starting to see that. You see the rally in oil. You're starting to see some support in corn and beans and some other commodities, cocoa. But they're also tied in with supply, not just money coming to it, because the wheat market's not responding, so they don't seem to think that the wheat market is the place to put their money at this time.
Very good, Merrill. Final question before we let you go. U.S. dollar. I'm going to zoom out a little bit here and show a few more bars to give us a little bit better perspective. This is a chart of the U.S. dollar continuation chart. How the dollar apparently bottomed back here just below $88 back in January, February, and has now rallied over 92. How does this affect our commodities, our export business? What is your take on that?
If you look strictly at the dollar and say the CRB index, you definitely get a pattern of inverse relation, which means simply as the dollar goes up, the CRB index goes down, and the CRB consists of many commodities. you had an article that was put out for everybody to read from Jerry Welch, and that was a good article, and it reminded me of what they said. You don't want to fight the Fed, because as the Fed raises their rate, they start pulling money out of the punch bowl. As they pull money out, more people will want to invest in the dollar, and the dollar goes higher, and then that makes it gives you kind of an unseen rally in our commodities compared to everybody else in other countries that buy our commodities. Now, if you have enough demand or a tight enough situation, and you take, say, for instance, corn, the corn market or any other particular commodity can move against that relationship and move with a rising dollar. But the fundamentals and the tightness has to be, the demand has to be there for that commodity to do that. And a real good example is this has gone up strong. The cocoa market has really gone up strong right with it. And cocoa is dependent on a lot of exports to a lot of different countries. So it's just there's not any supply there, and the demand is staying the same.
All right, Merrill, great to have you join us and participate in our webinar here. You offered some great insights. And do you have a phone number, Twitter, or anything that
well, before you go on, we're talking about these, and everybody's talking about bullish markets. There's one little thing I wanted to bring up, and I'm sorry to interrupt, and it's very quick. There's a guy named Ray Dalio, and if you don't know him, and I'm sure a lot of people don't, he runs Bridgewater Hedge Fund. Back in '85, I believe it was, he was looking for a recession in the markets, and he bet all his money that way. And he ended up losing all his customers, most of his money. He even had to borrow $4,000 from his dad to pay his bills. And from that, he learned a valuable lesson, and that was to use risk management. And while it may seem strange that somebody's telling you to sell corn at these levels, or beans at these levels, or buy puts at these levels, you know, this guy almost lost all of his money. And today, this man is worth $17.4 billion because he learned his lesson and he takes care of his, money management. And I just think it's a huge lesson for the farmers out there, because, it just seems like anything you pick up anymore is bullish corn and beans.
Well, it's a great point that you bring up. There's a lot of bullish people out there right now, a lot of talk about how high these prices can go. And I'm going to throw a chart up here of corn. This is a weekly chart. And this blue line here is a sentiment index, meaning what happens when people get real bullish, what happens to prices. And you go back to July last summer when everybody got real bullish, was right about here at the high point, and prices moved lower. Here we've had this people being real bullish again in this corn market, and prices have kind of stalled up in this area around this $4 mark into some weekly resistance. So your point is certainly valid. While there's talk about bullish fundamentals, talk about prices moving higher, $5, $6, $8, buying some put options and letting the upside run in case we do go that high is good risk management. Making sales and spending 10 to 15 cents reownership on a call option to give yourself some insurance if prices do go higher, you get the maximum value out of that is good risk management, and that's what we really want producers to use instead of just market outlook.
Yeah, I agree.
All right. Thanks, Merrill. Well, how can folks get a hold of you?
They can reach me at 815-432-2220 or at Merrill@CrowleyHedge.com.
And you're also on Twitter?
Yes, I am at Price Help.
Price Help. Perfect. All right. We enjoyed having you on here. Thank you for your time. Thanks, everybody, for listening and viewing. Hope this helps you out. We'll be back very soon with our next webinar. But in the meantime, you can sign up to receive our Market Insider TV segments that are done twice a day, as well as other emails, newsletters. Merrill's has a newsletter. We hope you take advantage of those. Have a great night. Thanks again for listening.